Okay, so I want to talk about e.l.f. Cosmetics in this video. They're releasing earnings next Wednesday, May 28th. I think same day as NVIDIA. So, you're already going to have that maxed over just a little bit because the hype train is NVIDIA. It has been, and it will be as they continue to grow. And, you think about NVIDIA having to charge off, $5 billion, but really it was going to be like $15 billion in revenue for them. That hurts, right? So there's going to be an overwhelming amount of eyes on NVIDIA. But I think we're skipping the undercovered, underrated company in e.l.f. Cosmetics. I think, one, they're loved in the U.S. by a lot of women, right? Cheaper brand of makeup, still quality, at least decent enough quality to wear and not hate, you know what I mean? And then you gotta add into like a few things about it, right? The company has been expanding massively internationally. I think and they've really just started doing that in the past, year and a, maybe 2 years, But now they're in 18 countries. They're in 1,600 Rossmann stores in Germany. They're in a bunch of Douglas stores in Italy. They're in France, the UK, Belgium, Netherlands, Nordic countries, Australia, Canada, and Mexico as well, But on top of that, they're not only expanding into this, but they've just raised prices, citing inflation and tariffs by $1. So that's going to expand into their revenue. Now they've announced price hikes will begin August 1st. So it's, a Q3 thing. So it really won't show up on the numbers until you get that Q3 earnings call. I think they would do it they usually do it in November, mid-November or something like that. So we won't see that until we get earnings in November. But I think we're going to really start to see some growth because of all this international expansion. And if you think they're done expanding internationally, I just don't see it. You know what I mean? Like, when you start to weigh in, the popularity of the brand already, and then the ability to expand it, you know what I mean? They're, on Walmart, in Walmart's, and probably definitely on Walmart.com, I think that as companies like Amazon expands into other countries, which they have, but they're not as present as they are in the U.S., right? You know what I'm saying? But as Amazon grows, a company like e.l.f. will grow with it, especially with its popularity on TikTok and the growth of TikTok, right? So I would not be surprised to see the numbers maybe not re-accelerate growth in a sense, but continue to maintain 30% growth numbers for many quarters, at least high 20s, right? And then their margins get a little bit better over time. Their gross margins expand, and gross profit will grow up, and eventually it'll show up on free cash flow and net income. And I think that's important to understand. And I think that right now you're kind of getting a pretty decent deal in the company at a $4.75 billion market cap, or right about where it is. You know what I mean? I think when you look at a stock, you got to ask yourself, mostly, does this company have brand power? One. And another big question, is this a stock that can double or triple in the next couple of years? Really, I don't want to just buy a company that I can get 25, 30, 40% over the next couple of years, even though that's probably a decent return. I want the company that's going to yield me 100, 200, 300% return over the next couple of years. You know what I mean? That's what I want to put my money in. I don't want to put my money in something that is just going to be okay. Will I be happy with 50% over 2 years? Okay, sure, yeah, fine. That's a pretty good return. But what I really want is that Palantir return, or that AppLovin return, or that, HEMS return. You know what I mean? Those are and Hims is a really well-run company. But I really want to see companies with strong cash, low debt or no debt. If I see a company with no debt and they're growing pretty good, then I'm intrigued already. You know what I mean? Because like obviously they understand how to keep expenses down and they don't have to raise money to continue to maintain and run their business and grow their business. That's like a big thing to me. You know what I mean? That's what I think about. But Elf doesn't have a ton of debt, right? I think this expansion goes over a lot better. And there's such a huge, massive amount of people outside the U.S. and women everywhere wear makeup. It just is what it is, right? Women everywhere wear makeup. So when we think about that, you know what I mean? We have to understand that Elf is probably a winner right now at a $4.75 billion market cap, especially if they're going to grow revenues. If they get to, you know, over the next 2 years, a $1.5 to a $1.75 billion annual run rate of their business, which isn't out of the question, because what are they doing? 1.2 to 1.3 right now? Okay, so at a high 20s to low 30% growth rate, and they might actually, you know, be able to push that up just a little bit with this international expansion. You know what I mean? I think it's an easy double up. I think it could go back to 150 in the next 2 years. I think that's a solid. Might just go to 200. You know what I mean? But I think that's a solid bet. You know, if you're thinking about it like that, right? But who knows? I might be wrong. It was a really good bet when it went down to like $45. If you were buying it then, that's off to you. Anyways, y'all.